Hi there guys, my name's Jacob and welcome to the channel. So today I'm going to be talking to you about the shocking truth behind how much a mortgage actually costs you. Now this is something that I think when most people take out a mortgage, they don't really think about the overall cost across the lifetime of the mortgage. Most people just see the interest rate, look at the monthly payment and think, I can afford that, let's go for it. And that's fine. That's what most people probably do. And in fairness, there's nothing wrong with that. However, when you find out how much the mortgage is actually going to cost you from day one to the last day you have it, it's actually shocking. Now, how do I know this? Well, recently I've just taken out a new mortgage, not for the house I'm in now, but for the house I'm about to move to in about a week's time. So I got the paperwork here from Santander. And in it says that I am taking out a £200,000 mortgage for a term of 30 years at a fixed rate of 3.94%, which I've fixed in for 5 years. So fingers crossed the rates will have come down after those 5 years. However, the important part, and what this video is about, is where it says how much is to be repaid. So it says I have borrowed £200,000, and for every £1 that I have borrowed from the bank, I have to repay £2.34 per £1 I've borrowed, which doesn't sound all that bad when you just think about it in those numbers. But when you actually do the math, by the end of the mortgage, I will have repaid Santander £470,000. And I only borrowed £200,000. Now this is the shocking truth of how much a mortgage costs you across the lifetime of the mortgage. And it's not something people generally think about because, like I say, you just think about the monthly payment, and if you can afford it, you go for it. But what can we do about this if we don't want it to cost us more than double what we actually take out of the loan? What can we do? Well, one of the best things you can do is overpay on your mortgage. So, for instance, the mortgage that I have taken out on this paperwork, £200,000, is going to cost me £950 a month. But of that £950, not all of that is going to pay off the actual mortgage that I've borrowed. Only about £200 of the £950 is actually going to go towards paying off the loan I've taken out. The other £750 is interest. And this is why over the lifetime of the mortgage, you end up paying so much money to the bank, so much more than you initially took out, because the interest, it racks up so quickly. And most of your payment, especially early on, is so much of the interest that the balance doesn't go down for years and years. So, as I said, overpaying is the way we combat this. Get the loan down quicker, which ultimately means we pay far less interest. Now, I've got some examples here for you. So, on my mortgage, the example that I took out here, so my payments are £950 a month. However, if I was to overpay £100 a month for the lifetime of the mortgage, so make my payments £1,050 a month, over the lifetime of the mortgage, I would save £31,000 in interest. And I would pay the mortgage off 5 years earlier. So instead of 30 years, 25 years. That's by paying just £100 extra a month. If I was to overpay £250 a month, I would save £51,000 in interest, and I would clear the mortgage 10 years earlier. And that's by overpaying £250 a month. So my payments would be £1,200. And if I could afford to pay £500 extra a month, so my payments would be £1,450, I would save £76,000 in interest alone, and I would clear the mortgage in half the time, 15 years early. So I think you can see from those three examples how incredibly powerful overpaying on your mortgages. And I would encourage anybody to do it, especially in the times we're in now, where the average interest rates for 2 and 5 year fixes are 5, 6 and sometimes 7% at the moment. Now, we do have to take into consideration that overpaying is not always the best thing to do. Obviously, you can save your money in a savings account and you can invest your money. And depending on what rate of return you can get, it might be better to do those two things than overpay your mortgage. Over the past kind of 10 years, mortgage rates have been incredibly low, anywhere from 1, 2 and 3% maximum, which ultimately, if they're that low, if you're locked in on a rate that low, then currently you can get savings and investment account returns that far outstrip 1 or 2%. So for you, you wouldn't want to overpay your mortgage. You'd want to invest or put your money in a savings account. But for anybody who currently is on a mortgage of most likely 4% or above, the best thing you could possibly do is overpay on your mortgage. You're not going to find guaranteed returns anywhere else in a savings or investment account. You're better off overpaying as much as you possibly can on the mortgage. The quicker you bring that balance down, the more interest you're going to save and the quicker you're going to pay it off. I hope this short video has been of value to you. If you made it this far, thank you for watching. If you could like the video and subscribe to my channel, I would be hugely grateful, and I'll catch you in the next one.